So we're looking at the SPY, and if you guys remember, I put out a warning, and this should be a screenshot somewhere in one of my past videos around the first week in March. And you see the circle right here, where I thought it was a critical point of that was going to influence whether we went up and down. Obviously, things have gotten worse, and they're headed down for the SPY. One of the issues is, and today is March 18th, and it's around 7:10 p.m. on the West Coast, and we've been touching this 660, 662, 661 area for quite a while. But the important thing is we had support up here, and that broke down. So here at 667, 673, and 671, we had support there, and that broke. So now we're hanging on by a thread right here, and if you can see from there, the next area of support is all the way down here till about 645. So I know some folks are looking at it today as saying, and because of the past week, we had a few stocks move up. Remember, they were foreign stocks influenced by foreign markets and foreign investors, not within the U.S. And as I started to look at this just a little while ago, and this is the daily, it wasn't this bad, and it looked like it got worse. Let's take a look at the 30-minute. Yeah, you can see here, 3 o'clock in a few hours, 10:30, 12:30, and there's a little bit of a rise here on the 30-minute. And I think some folks are thinking, well, maybe we've hit bottom and it's time for things to get back up again. But what strikes me is, I guess you could see this downturn and then back up, but these could just be folks shorting it, because what they're looking for is the trend is obviously downwards. So as shorts, they're adding and they're looking, because they know that folks are going to invest and it's going to go up, and eventually up here what they'll do is that it goes up, they'll start adding and adding and adding until it hits the tip and it rolls back and it falls back below what they've added, and then they wind up making money. So if you're looking at the market, you got to be careful. So we got to watch this whole trend line from there all the way to there. We got to be careful, and that means making sure that you don't size up, take small quantities, and be very careful of the stocks that you do select. So let's take a little closer look at this, what we have right now. And mind you, this is going back to December here. So you can see the purple channel lines there where it's marking the downturns, and the cyan lines channels were marking sort of a move up, and we were sort of over here hoping that this would move up, but this whole circle for me was a point of critical area where it would decide what was happening. So now that we know, let's go ahead and move the warning off. We continue to be in warning mode, but let's take a look closer. So one channel down, 2, 3, even though it sort of was moving up, right here it finally collapsed and it's going down. So now we've got this channel headed downwards, and if we were to draw another one, there's another steep line down here. Yeah, you could argue that maybe this is a double bottom here, and that maybe we're going to see a bounce up. But if we do see a bounce up, I think it's going to be smaller and fall. Let's add some moving averages so that we can take a look. Where is it? Let's see. Ooh, it's not what I wanted. Ah, here we go. I've got it set already. Okay, so here's the 200 moving average, and it's getting close. And the 200 often acts as a huge area of support. So, and that is sitting right now at 657. So this area will be critical over the next few days. But this pattern looks like it, if it's going to keep going down, it's going to go this way. Where's my trend line? It's going to go this way. Oops. Going to go this way. Right? So it'll take a little while. And we're looking into May. There's with no mortgage cuts, no relief from the Fed, very little is going to happen. And if the Fed does cut rates in May, it certainly might help the market go up, but it's going to make it difficult. The other thing is we're also having to deal with news. So we're not only having to deal with warnings, right? We have news to deal with and to contend with because they are driving the sentiment and whether folks are looking to invest or not. There's certainly one good thing that you could say is that if we can expect these lines, the 9 and the 21, to cross over at a single point. So our next, what we want to be looking for is the 9 and the 21 to come down and hit the close to the 200, and then maybe we can see a bounce up from there. But it looks like they're quite a ways away, so I wouldn't put it in there until the end of March maybe for them to come down and hit if things are bad. It's just going to go up and down, up and down, up and down, up and down until it hits it, and then we'll have an opportunity to catch the market. And the reason why this is important is because obviously it's the SPY. I'm not talking about only investing in the SPY, but I'm talking about what the sentiment of the market is. So let's take a look at this is USO. I believe it's a barometer of oil, and you see there 124 with the news, and then it falls all the way back down to 94, then it curls back up again, down, and then back up again. So we're sitting at 122 right now, almost hitting that 24, and it looks like there's no sign of it moving up. I've got other charts to show on these same stocks, but let's finish our evaluation. So let's look at NVIDIA. And this one, NVIDIA looked a little bit more stable for me. It didn't look like it was going to lose. It just looks like it was going to consolidate within 171 and 195 or so. And that's what it's been doing, up and down. So NVIDIA, I think it's a beast on its own right, and it's going to continue. But as you notice here, here's the 200, here's the 9 and the 21. And here, they're a lot closer. So there's a dragon mouth right here about to open up. So we should be careful, and rather than expecting a bounce up, we should be just looking for it to consolidate. And this time I think it'll be right around here, 184 to 175, and it's going to remain in that channel until we see something different. Let's see what else we can look at. Let's take a look. I don't follow Apple, but look at that. Apple is actually closer to the 200, and it already broke the 200 there. So if a company like Apple is hitting down below those levels, you need to be careful. What else do I follow? Oklo. This is another. This is an energy company, a nuclear energy company, and yet, look at that head and shoulders pattern, and broke the 200. Likewise, since it's below the 200, it'll eventually come back up again sometime, but we're probably looking at May or June or into the summer if things can get resolved. Right now, it doesn't look like it's anything getting resolved. The VIX, which is the reverse. Look at that. Trying, then it falls, then it tries, and it's bigger. $35 on the 9th. And then it falls back again. And but here's a crossover, and it looks like it's just going to consolidate, looking for a higher move. So if things go worse for all those other symbols that I showed you, then that'll be a problem. I also wanted to point out a couple of things with regards to the market. You can always look at /NQ, and because these are important, and you can see sometimes what the pattern is for the market. And later I will share a couple of websites where you guys can go in and look at this information very, very much at a glance, and not have to be looking at charts and dealing with charts. But I was just looking at this. Let's look at the 5-minute. No, it's not looking too bad there. It looks like it's on its way up, but you'll see what I see on the other one, on the website. /ES is another one, and they seem to move in cohesion to each other. So if you see these headed down, stay away from the market. If you see both of these headed down, if you see them that they're sliding back up again, then we might have something good in the morning. Let's see. XRP has been hanging on by a thread there. 5-minute is not good enough. Let's look at the daily. And 146, it looks like it has held support. But part of the problem for not only for XRP but for all the other symbols is all of this up here is now resistance. So from right here, next resistance level is 181, and that's going to be very tough. Though it looks here like it wants to move over, but look, it's below the 200. So in order to see a bounce on this, when things get better, we want to be able to see this go, try up, fail, try up again, cross the 200, hold, fall back below the 200, and climb again. And then we'll know that we have a good approach. That's about. I think that's all I have on. I have the other chart that I need to share. So let me switch to that other chart because I can show you guys another approach and how charts can look differently depending on what you're looking at. All right, so this is another chart, a little bit more simpler with just EMAs, and we're looking at the 8th and the 88. So the let's see which one's which. Okay, the 88 is the green one, and the 8 is the white line. So, but let's forget about XRP. Let's go back to the SPY. So what we can do is we'll look here at the couple of. Let's look at the daily. That's not the one I wanted. Well, let's look at the 1 minute. What the heck? Let's explore what's going on. So you see here, as soon as that the white goes up, freight breakout, breaks below, and it just careens all the way down. Here it goes up, but it cannot hold, and it falls back. Again, it's trying, falls back, cannot hold. Here's another one. This time it went back down, and now it is held. And so this is about 1903. So now it is held between 661 and 662 for $1. So what folks may be looking at is, well, we might look at a move up here. And this is actually good. There might be a move up here, especially since that was the last high. Then the buy would be here at 661 and moving up, and it would be a good dollar return. But we don't know what it'll do tomorrow. So you have to follow the charts. And this is one of the reasons why you should look at multiple charts and look at things a little differently. That way you get a good idea. We know that how the SPY goes, so does NVIDIA. Look at that. It held, but then it dropped. Now it has fallen. Right above the high, 180.75 would have been the purchase. And 181, you would have made $1 there. Part of the problem is the options are not open 24 hours, right? So you have to buy the entire stock, and it doesn't mean that you're going to make a whole bunch of money. Let's look at Apple. Apple, we know it's below the 200. And remember, we're on the 1 minute chart here. And Apple's doing the same thing. And this one appears to be curving down. So I think Apple has its problems, even with the release of their new gimmicky laptop. Don't buy into gimmicks. The Neo is just a gimmick. Nothing important. Okay, now let's look at the ES. And look at this, the same pattern. Falls below, it goes up. Above the high, the buy would be 66.80, and it goes up to 66.88. But there's probably this doesn't look like it has curled, but it probably will curl, depending on what resistance we have. And there is resistance up here, 66.89. The next point would be 66.96. So we're far from being healthy to the point where you can say, oh yeah, I can get in and I'll probably make money. Same thing here again. So you have to watch all of these patterns and decide when you're going to get in. Let's look at the VIX and see what the VIX is doing in a minute. The VIX is, here's the pattern. Goes low, goes up, hovers. There's still not an entry. Let it go back. Now it has sustained. Here's the high of 24. This would be where you enter or wait for another pullback, and you would enter at 24, and now you're sitting at 25. Now it's way too high here to be buying, but the way conditions are headed, news, are making things worse. So you've got energy fields burning for the world, and for the oil, which is a world commodity, is not going to be very good. Yeah. Oklo is the last one that I showed you guys, and it's an energy, and this one looks more like an apple. It's just there's no opportunity here to move forward. So I'm not gonna look at a whole bunch of symbols, because everything that I see is red right now. Let's take a look at this SUNE. Looks like it was moving up. Here it is. The buy point would be right here at $2, and it moved up all the way to 213, and that's where it's sitting now. A little pullback and a little move up. But our expectation is the volume is not there. The folks are not in there, so it's going to curl down. The only other green one my scanner has, this one's 27% up, and this one's a move up here. It goes below, it goes up, it holds above this would be the buy. If you're willing to hold it, and it moves up, crawls back down again, scary, from $1.19 all the way down, and now it's crawled back down. So this one is dead, I think. Yeah, let's take a look at this. This one is bearish. Here's another one. Look at that. $1.21 all the way to 221 is a dollar raise, and now it's just scaling those lines, the 8 and the 88s. It's just, there's no opportunity there. Let's look at the other scanner. What do we got? BBNX. This is a higher price stock. This one did not have an opportunity. You wouldn't know it because it didn't get an opportunity to cross and hold. It just went up. So now it just goes up. Let's see what else. Yeah, there's no point in looking at anything else other than those. As far as trading, did I trade? Yeah, I traded. Did I trade today? Yeah, I think I traded today. What did I trade? Let's take a look. AIM. I did a little bit on AIM, and I have been trading, but since I'm using very small and tight positions and only a few minutes on the market, I think I made $14 last week in two trades on different days. Made $34 I think yesterday, and today I came out ahead 94 cents. So today was just a pay for play day. Let me see if I can switch to the other chart. And because there I think I have the all right, let's take a look. Yeah, I know they're busy as hell. Let's see, let's edit the studies and we'll clean them up a little bit. Hide them back up. Okay. So yeah, this climbed up to $1.18 about 6:13 in the Pacific time right before market open. I thought I had an opportunity here. I thought this was a pullback, and I bought in at 158, and I only bought 10 shares, and held it through the open as it was down, but it climbed up a little bit, and then right at the top here I sold at 1,265, or on the way down actually, and I lost $3.15 on it, and then it looked like it was just got even worse, and then it consolidated and offered no other opportunities. Yeah, up until, and now it's probably dead, right? Yeah, okay. Then the other one was ARTL, I think. And this one had a better chart. Yeah, here we go. So early in the morning, it looked like it went from 476 to 814, and then it just played off. And then here's at open. I didn't trust it at open 615. I was very hesitant. I was even hesitant right here. I didn't like this pattern here, even though it looks bullish. I should have entered right here, the candle to make a new high, but I didn't do it. So, and then I sat there like a dummy waiting. And by that time it's way too late. So I entered here above BWAP at 781 at 645, and then exited up here at 719 for a loss of what, 60 cents on 10 shares. But then I let the pullback come back, and then it started to move back up again. And this time I went with larger size, 170 at $8.01. And got lucky and got out right here with 822, made back all my money, and wound up the day with 409 positive on this particular stock, which made me green on the day, 94 cents. So so it's quite interesting. There was another chart I wanted to show. Was it on this one? No, maybe it was AIM. No, I forget the symbol. I should have taken a picture of it. I didn't record much. But like I said, the partner seems to hold. Um, where is it? Let's take a look here. What we continue to see is this up and back down. And maybe ARTL, it's a little better example. Yeah, right here. So we see a huge move up, and then just when we think, oh, maybe we'll go up and this will, will go up like the one other Chinese stock did a few days ago, it's not going to happen. It just falls back and dies. So you guys got to be careful not to get into that. Okay, the next thing I got to show you guys is the web. So let me all right, so tools to help you guys. I talked about the NQ and DS, and you see down here, this guy has a great website, ocstrader.com, and he's on YouTube. Look for OCS Trader, and I don't get any benefit out of this, anything. It's just that he has a great website, and it's really good information. And as you can look here, the NQ and DS, and you can see that they're slightly moving up. Now the size of these candle bars are relative. So what you should do is glance at it here, and then go into your own charting software, and then take a good glance at it. And like I said, this changes constantly. You can jot down or memorize where it's at, because you'll see how it jumps up and down. And during the day, it's going to go up and down. When there's bad news, it'll go up and down. And this is on March 6th, and you can see here it's 9:41 Central Time, 7:41 Pacific Time for me. But this is a great source of indication on where you can you can find that information at a quick glance. And what I do is at night, I look at this and I see it. And if it's red and going down, then I know, hands off, there's no point in getting up in the morning. In the morning, if you look and it's still headed down, then maybe midday or even power hour might be an option. So you got to look for those patterns to try to help you. The only problem is midday, power hour, less volume. So the other thing, I've been seeing a lot of you folks who are out there trading, and you continue to try to trade the same way that you were doing it a couple of months ago, looking for large payoffs, and it's not happening. You guys are losing. So don't let that happen. Be a lot more careful. Use 1 share, 10 shares. If you think it's going to happen, nothing is for sure in the stock market, and more than likely everything will turn around, curl, and come back down. So hopefully these tools will help you. The next tool is this one, and I really like this one. And like I said, I don't have any affiliation with any of these sites. I just think that these are tools that are out there, and you can use them, and you should make use of them for whatever. And this gives you a lot of information that it's free. Obviously, what you're looking at here is just a little bit of a glance, but we're going to dive in now to be totally transparent with these sites. They do have trials. They offer bar chart for free, but they have trials, 30-day trial here, and the pricing is not that bad for subscriptions. And they have a lot of tools. And once you subscribe, one of the great tools that they have is screeners. And you can set up your bar chart screeners, and you can set up a lot of information and you can watch there how to do that. Um, let's see, where is the trial? Let's go to the trial and see. I wanted to show the let's see if it shows the, it's not popping up. It's popping up in another window here. So hold on a second, and okay, I'll what I'll do is I'll switch it to another window. Let's look at what tools you need. Stock, there are two places that you need to take a look at that are important for the market pulse, and they have lots of options here that you can look at, and they can get overbearing. You have before and after markets, so in the evening you can look at the post market and take a look at what's happening. You can take a look at the indexes. We're interested in Russell indices for low price stocks, but I want you to take a look at this market momentum, and it gives you a daily activity. And it shows you what's happening in the market. And of course, it's showing me the, hold on a second, let me increase the size. There we go. Okay, so that's what was happening. So once again, let's go back to the beginning. Click on stocks, and market momentum. And then what you'll be able to see, yeah, the ads can get, so that's why you want to subscribe, get a subscription going. And it doesn't let me scroll, but you can take a look at down here by the merchants. So for example, let's take the top one. You'll be able to scroll down and look at a whole bunch of other things. But here's important. Overall, there were 5,117 traded components. In the past 5 days, 790 of them have reached new highs. But look at this, 1,913 have reached new lows, making a negative 1,123. If you look for a month ago, 3 months ago, etc., etc. Now, what we're looking is for these numbers, for this variance to be green. Obviously, they haven't been green for a while, but if they're not really, green, then be as less red as possible. So, in here for the year, minus 185 is nice. Minus 504 is better because in the last 5 days, it's been twice as worse. For the NYSE composite, 307 on the negative. And like I said, if you guys will scroll down, you'll be able to see more stuff. I don't know why I don't get the scroll here. And that might be a problem. So I might have to do recording on another screen. Market performance. This is another one. Oh, you got to scroll right as you get in. I'll try that. Cool. Now it's working here. So take a look at these. Large cap stocks above the moving averages for the 5-day, 20-day, and 50-day, even 100, 150, and 200-day. Utilities, obviously, which has been energy and oil, have been up here. And the rest have all been low. Oops. Okay, I got to reload it again so I can go down and show you the Russells. Okay, they got some type of... here's the Russell indices. And look at this, the 5 moving day average hovering around 30%, and it's red and it's purple going back 150 days. When the market is solid and it's working, many of these will be green, some may be purple, but we will not see this red. If you see this red, don't be trading. There's no point. Why would you do that? I tried to catch it and it didn't work. Okay, but what you can see down there, let me take a look here. Yeah, I should have logged in. Are the composites, and what you don't see here, you see NASDAQ. NASDAQ, the difference today was 734, and they update this daily. So right now it's based on the day. If you look at it early in the morning, it won't be updated until the end of the day. But NASDAQ shows 435 new highs and 1,169 new lows for a difference of negative 734. That's for the 5-day compared to the 1 month, which is minus 478. The 3 month is at minus 310, and the 6 month is at minus 238. So progressively, the market has gotten worse. We already know we're in a bear market, and there's no point in trying to be over aggressive and trying to make money. These are the routing components, composites. The NYSE ARCA, that's minus 82. I guess there's a low number of, there's only 122 components there. And way below, all the way at the bottom, and you guys should do this on your own, there'll be a market performance indicator. And you'll be able to see the 5-day, 20-day, 50-day, and 100-day, 150-day, and 200-day for today, for yesterday, for last week, and for last month. And right now, the 5-day moving average for the market is sitting at 33.38% in the red. The 20-day is at 23, and the 50 days at 27.63. Yesterday, the 5-day moving average was at 56%, and it was green. So yesterday, we had a little better market to trade in than today. So now, does that happen, alternating days? No, it doesn't. And this information only comes out after whatever's happened on the market. But it can give you an idea of trends. Because if yesterday was 56% and we were moving back up and we could continue to trade, we should be at above 50% today. We're not. We're at 33%. So folks are taking their profits and they're moving on. Okay, finish that interacting. Okay, so that's what I had for you guys. So trade carefully. Do not lose your money. There'll be opportunities when the market comes back up again. Keeping your money in your broker's account, if they pay interest, is only going to make you money, not make you lose. If you do not trade, you do not lose. There's no harm, no foul. The market will be here long after we've given up. So rather than give up, rather than become disgusted with the fact that you continue to lose, and if you want to stay in touch, do like me. I jump in a couple of days a week. I'll go in the morning, not very early. I'm not touching the pre-market too much. And if I do, I only do no more than 10 shares, so that way my losses are constrained. And look for the open, not right off of the open, but 5-10 minutes after. Let the market settle down and show you which symbols are going to come to you. If you try to force them, if you try to use news as a catalyst and jump in from the very beginning, you could find yourself on the downtrodden side of things, because from what I've seen is I've seen folks jump on what they thought was actually good news. Here's they've got a cancer phase 1. I'm going to jump in. Here's the catalyst. There's really good news, partnership with a large internet company, and I'm going to jump in. And then here comes this red line all the way down, and folks lose $200-300 all at one shot. So that eagerness you need to fight with. It's the same old psychological confidence and determination and the waiting game that we need to play, and we can't be anxious. So What happens if the market sees we're anxious? The market is going to take our money. So don't be super anxious. Be calm. Be collected. Use discipline, and let's just wait. Once the things begin to look better and we start to see green on all these indicators, then we'll know that the market is changing and the things are for the better, and then we can start moving in, and then we'll have an easier time predicting what stocks are moving up. We will still have losses, we'll still make mistakes, but we won't make only mistakes, which is what's happening right now to a lot of us. We're just making mistakes. So that's it for today. Hope you guys have great trading days, and exercise discipline. Gorilla out.